All right. Back in the action once again. It's about that time of day again here, folks. Monday evening, January 27th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is to identify the best levels of support and resistance, the best entry setups I'm watching for tomorrow, and most importantly, some of the most common traps I'm trying to avoid and helping you avoid for tomorrow. That's Tuesday's trading session. And we have a lot to cover in tonight's video. We got a bunch to talk about tonight. We got, of course, the charts are all prepped up in the background. Got some oil, some S&P, some Nasdaq, and some gold. The one thing, there's actually two very common things among all these markets. Bunch of gaps, a lot of ranges, some expanding triangles. Got a great video. We got some great setups we're watching for the gaps, the expanding triangles, and the ranges for tomorrow's trading session. And we can't forget about the calendar. We're going into the end of the month. The end of the month always tells me to be patient with those setups. We got volatility expecting into the end of the month. Got some big news this week. We're going to break down the calendar. We'll grab the charts, and we'll get us all prepped up for tomorrow. Before I jump into the video though tonight, make sure if you're here for the first time today, make sure you subscribe to our YouTube channel. I don't want you to miss any of these videos we publish Monday through Friday on this channel. So make sure you subscribe. While you're down there, don't forget, hit that thumbs up button for me if you like the content in tonight's video. And if you have any questions about anything we talk about in the video tonight, drop those questions in the comment section below. All right, let's not waste any time. A little bit late here tonight on the video, so we'll play catch up here. Let's jump in first tonight though on this calendar. Let's make sure we take a look at the schedule here for tomorrow. Now, of course, the first thing I want to talk about tonight as we go into the calendar is we know we're going into the last couple days of the month, right? This is a very important piece of the puzzle this week because anytime we go into the end of the month, we always expect to see extra volatility, right? At the end of the day, at the end of the week, at the end of the month, we do expect to see the market's volatility start to increase. Traders who are way up on the month, traders who have dug themselves into a hole this month, right? They tend to get a little more risk tolerant, a little bit more aggressive. Markets get more emotional as we go into the end of the month. And we don't see this very often, but the actual end of the month is Friday. So it's very much a climax, so to speak, as we go into the end of the month. And I'll tell you right now, if there's 1 month out of the year that professional traders want to put a big number up, it's definitely the month of January. January and the month of March are really two important end of month times because it means big things if you're working for a money manager, working for some trading firm. The end of the first month is always very important for mindset for you, but the end of March is obviously an important milestone as well. We'll talk about that as we get closer to the end of the first quarter. But we know as we go into the end of the week, we know to expect some more emotion in the markets. We know to expect more volatility as we go into the end of the week. What do we have here for news this week? Tomorrow, of course, being a Tuesday trading session, the 28th day of the month, we get some durable goods and some consumer confidence. We are looking forward to those two news events. Those are big market moving events. Durable goods to get us started at 8:30, and of course consumer confidence to kick off the session or to go into that 10 o'clock top of the hour. You'll also notice too, we got the FOMC meeting scheduled for tomorrow as well. We're going to hear that announcement on Wednesday afternoon. Look at Wednesday. Wednesday is stacked. We've got the international trade number at 8:30. We got some home sales at 10, inventories at 10:30. Let's just throw in a Fed announcement at 2:30 on Wednesday afternoon. And also Wednesday the 29th, we are watching rollover right now on gold. We're probably going to get rollover sometime, at least, probably not. It's tough to tell always, right? But we'll wait till the volume rolls over here. But maybe tomorrow, but it looks like we're looking at rollover officially on Wednesday for gold. So keep that in mind as well. So gold rollover on Wednesday, if not late in the day tomorrow. We'll see. We're watching the gold rollover closely here right now in our trade room. We got, again, lots of news tomorrow, though. International trade, pending home sales, inventories, and of course the FOMC on Wednesday. Later on this week, GDP, right, is definitely the big number on Thursday morning. And then as we go into the Friday trading session, one of my favorite news events is the personal income and PMI, right? Anytime we see that PMI, we always know, right, we're probably going to be getting some pretty good moves around those news events. So a lot of big news this week, an emotional end of the month, I would imagine, right? It's been kind of a choppy last couple of weeks. This virus scare coming out of Asia. So we are expecting more volatility. We'll see how the markets, as they go into tomorrow's trading session, how they position themselves ahead of the FOMC announcement. But right now, the one thing we know for tomorrow is we get the durable goods orders bright and early at 8:30 Eastern time. Hopefully I'll see you there with me tomorrow morning at the opening bell. We open up our trade room, by the way, every morning, 8 o'clock Eastern time. I want to see you there right there with me, and we'll have a front row seat for that durable goods orders tomorrow morning. Let's get these charts up and running here now, though. Got the calendar out of the way. Again, extra volatility, right? We got some rollover stuff coming in. And again, on the gold, I'm kind of watching here. I'm kind of watching the 220 and the 420 contracts, right? Now, the 420 contract on gold right now is about half. It's a little bit less than half the volume on the 220. Once that 420 contract has more volume than the 220 contract, and again, it might be tomorrow. Doesn't look like it at this point, but be aware tomorrow on gold. If you come in tomorrow, and you'll notice the 220 be very low volume, it will all have rolled over to the 420. We'll do it tomorrow together, obviously, in the trade room. But in case you're not there with me tomorrow, right, you know what you're looking for there on the gold. We'll talk more about that here as we go. Now, looking at my charts tonight, I got some crude, some S&P, some Nasdaq, and of course some gold. The most common factor among all of these is gaps, right? Lots of big gaps down on the oil and the E-minis, and a gap up on the gold here. Lots of ranges, lots of expanding triangles. So tonight's video, it's going to be a lot of kind of repetition, but at the same time, though, we should be able to get through this relatively quickly here because a lot of these are going to have the same basic strategy. As you can see right here, we'll open up first here on the crude oil. Now, first things first on oil, we have heard rumors out of OPEC over the past couple days. They're floating this idea of a production cut among the OPEC plus nations, right? It's, of course, this is nothing new. Anytime oil takes a tumble, and we're looking at potentially here, if this keeps going, got 51 and $50 a barrel. Every time we get down into the low 50s, we miraculously hear about some production cut from OPEC, and we seem to rally back up into the high 50s again. Now, obviously, right now, that is very much speculation, but they're leaving some clues out there this week on the news feed. Last week, we heard from OPEC. This morning, we heard from OPEC. They're floating this idea that, yeah, we might be open for some production cuts. So even though right now, there's no evidence of that on the charts right now, because obviously, we're sitting at 52.5 right now. But if we do see something overnight, typically what will happen is between 5 a.m. and 7 a.m. Eastern time, if OPEC's going to put an announcement out, they'll do it right after basically after the morning session in London, and then markets will typically respond bullishly, obviously, if we do get that kind of just sniffle of a production cut. So I want to warn you, we're bearish right now on oil, but from what I'm hearing in the rumors out there, at least I'm seeing on my data feeds right now, OPEC is kind of stirring the pot right now, and this is nothing new. If you've watched oil as long as we have here in our trade room, you know that once we start, markets pretty much just kind of bouncing around right now on oil in this big range, right? You got the high 50s, the low 50s. Once we get down to those low 50s, OPEC says, you know what, let's do a production cut. The market freaks out, we rally back, they keep playing this game back and forth. So we're sitting down, again, we'll really be at those lows once we get down in that 51, right? The 51 and the 50 area down bottom here. So we're not quite there yet, but just, I just want to warn you, don't be surprised here if we get things shaken up here as we go through this week, as we go towards the end of the month, we get closer to that inventory report on Wednesday. We may hear something out of OPEC that may shake this thing up. So now that we got that out of the way, what do we know about oil? First of all, we know there's a big gap on the chart. Pretty much all of these markets have gaps. We also know there's a range on this chart as well, right? So these are very commonalities we have, very consistencies among all of these markets tonight. We also can see an expanding triangle. And these expanding triangles are very, very popular, very, very important to keep track of on range-bound markets. So in all reality, those are the three main components that I see on this chart, and that will be very similar to most of these charts tonight. Let's go over the most important things first. No, the most important thing is not the gap on this chart. Most people would probably say the most important thing is the gap on there. It's actually not the most important thing. Gaps are great. We'll talk about the gap in just a second. The most important thing is a very strong move down. Now, one thing about a gap, anytime we see a gap down, just think about a gap down as a big red candle. Right? So if you're wondering kind of how I look at a gap, anytime I see a gap down like this, where it gaps from the closing price on Friday, right, that opens up on Sunday evening at 6 o'clock, there's that big gap down. If it's a gap down, right, think of it as a big red candle, right? That's all it really is. Okay, so we've got a big, strong move down into a trading range. Okay, that's the most important clue on this chart as far as I'm concerned. It's a bear market into a trading range. Now, what do we do with a range? Ranges are balanced. We buy low, we sell high, and we avoid the middle, right? I want to sell high above the range. I want to buy low underneath the range. And of course, I want to stay away from the middle, because if you understand what a range really is, ranges are balances. They're magnets right in the middle. So you don't want to get all chopped up right inside that middle. When I have a range-bound market, I want to wait for the market to try to go higher. I want to wait for buyers to try to keep it going, and I want to sell back down into that range. Just as we saw back here, they try to take it higher, they try to keep it going, and they fail back into that range. That's exactly what I'm looking to do tomorrow morning. Now, as we go lower, right, there's a little bit more trouble here, because as we go lower now, I now have a bear market, right? For me to be a buyer now I've got to be a little bit more patient and let those sellers kind of try a couple times before I start to look for that long side going back up into the range. So the first thing I notice is got a big old range on the chart. Buy low, sell high, and avoid the middle. The next big clue that I see, nope, it's not the gap yet. It's this triangle, right? It's the expanding triangle. Now, the expanding triangle overhead really makes for a great level of resistance. And hopefully we can get a nice big pop higher here in the overnight and then sell it as it comes back down into that range. As far as the buy side goes, right, trying to buy off of the expanding triangle, I'm not too convinced that that's going to be a really great trade. I think that expanding triangle will probably set up for another type of pattern, which I call a two-try breakout pattern. So we'll talk about that here in a moment as well. The third big clue on this chart, okay, now it's the gap, right? Now it's the gap. And you can see I'm purposely prioritizing this. The gap is really, it's not a very important part of this strategy. I shouldn't say it's not an important part. It's just not the most important part. So what's the best way to trade a gap? Well, most importantly, you have to understand what a gap is. Gap is momentum, right? It's a big, strong momentum push in the direction of the gap. Now, when I was a rookie, it was very, very popular and very common knowledge that something like 99%, it's actually I think it's about 89% of all gaps get filled. When I was a rookie, I thought, so it's almost a guarantee that they're going to go back and fill that gap. So why don't I just try to buy into it, right? Why don't I just buy on the way back up to that gap? And that is how I learned the proper way to trade those gaps. So again, what is a gap? A gap is a momentum move. Okay, gaps are also well known among, some of the most popular kind of day trading 101 books, stuff that rookies read in their first couple of years of trading. And, there's a big statistic, right? Almost all the gaps get filled. It's a very common rookie mistake to try to force that trade going back up to fill the gap. So what I like to do is anytime I see a gap, my favorite strategy is simply to wait for those traders to try to pick that bottom and try to go back to the gap and simply trade right into their stops. So the next time you see one of these big gap scenarios where, again, right, we gap down, for example, just wait for that time where the market tries to turn, buyers try to buy the pullback, and just sell right into their failure. Because remember, if you're trying to fill that gap, you're going against the momentum. And yes, most gaps do get filled, but what don't they tell us? They don't tell us when they get filled, right? Most gaps do get filled, they do, but we don't know when they're going to get filled. So trying to force a reversal to get that gap fill is really one of the easiest ways to make a profit or lose some capital if you're not paying attention. The best way to trade a gap is to wait for those counter trend or counter to the gap, right? Wait for those counter gap traders, wait for those gap filled traders to commit to it and literally trade right against them, going with the momentum of that gap. So now that we know that's kind of the basic idea, right? We know there's a gap up there. We know the gap will try to get filled. I'd like to kind of catch those rookies on the wrong side of the market, trying to force that gap fill. I've got my range. I want to buy low, sell high, and I've got my triangle. Okay, now let's put together a good plan. I want to be a seller on this. What's the best way for me to sell this market? Now, as I mentioned earlier, I've got my trading range. That's going to give me my sell zones overhead and my buy zones underneath. If I want to be a seller on this, there are really two patterns I'm watching for tomorrow. The first pattern is going to be the easy one, right? I want to get up above this range. I want to see, just like we saw back here, I want to see those gap fillers, right? I want those gap fillers to try to force it. I'm going to wait patiently. I'm going to put my order right where those buyers have their stops, just like we saw back here. So once they fail, right, it'll collapse back down into that range. I call that a failure pattern, and I'm always looking for that failure into a pullback combination setup to go back into that range here. It's a failure into a pullback combination. So again, I'm looking for that move up, get those buyers, try to chase this thing going higher, right? They're all going to be thinking, see, we're going back to fill the gap, right? But the odds are not in their favor. And once I see them try to pull the trigger right off that pullback, now I know exactly where their stops are, and I can sell right into those stops to go back down into that trading range. That's one really great setup I'm watching here for tomorrow. And again, it'll look very similar to this one. Hopefully it goes a little bit higher. Hopefully it goes up into this area of resistance overhead. We can go up, wait for them to buy, and sell it right into those stop loss. Because again, rookie traders are not going to, they're gonna be trading long because they think that most gaps get filled. The problem is we don't know when it will get filled, and we can't be buying this market until we see some proof of a reversal. Next up here, what if the market keeps going, right? So I think we have this expanding triangle pretty well nailed down, right? As we go lower, if I can get a strong run down to that triangle low, what happens is once these triangles get really wide, they lose their ability to stop the market, right? So if the market really runs lower here, down to the low of that triangle, okay, probably not going to be able to dig out of that hole and go all the way back up in. In other words, once the triangle is really wide, it's going to have a hard time holding this range together, right? When the triangle is relatively narrow, you'll get some really good setups off it. But once that triangle is really wide, that momentum starts to fall apart. So that's another plan for tomorrow. As we run lower, right? If we do keep running lower here with some good momentum as we go, I'm watching for a very simple but very powerful setup, and that is a two-try breakout pattern. Okay, that's a really simple pattern here. And what I look for is, again, I want to see us kind of go down and bounce almost off of that, right off that trend line. Then what I'm going to do is I'm going to wait for the buyers in the market, who, again, it's a range, so buyers will likely be trying to buy it back up into that range. But again, momentum will be way too strong at that point to be a buyer at that point, right? We're overall bearish. I'm going to look for those buyers to try to take it. Right, what happens is the sellers will take some profit. The buyers will come in, try to buy it. I'm looking for a trap high right there. That trap will be easy, right? That'll be an easy target right back down to retest a low. And then my ultimate goal is to get that runner down to 51. Okay, that's the idea here, right? So we want to see that momentum going lower, roll over, bounce, and then short that sucker right above that high. I call it a two-try trap pattern. So again, it's a failure pattern. If I get lucky, it'd be a failure into pullback combination. as we go back down in, or I'm looking for that nice move down, that bounce, that trap, right, and go that two-try failure pattern or two-try breakout pattern, as we call it in our trade room. Next up here, how do I buy this market? What's the key to buying this thing right now? Well, the key to being a buyer right now is either A, look for a reversal off the low, or B, look for basically a breakout going higher. To be a buyer on this, really the key that I see on this, the key that I can see right now on this is going to be, let's get down to that pendulum swing. Now, one of the things about a range is that you can measure the amount of the move under it, amount move above it, right? So see how it's all symmetrical there? So this area right there, right around that $52 a barrel area, you'll notice it's also going to be a measured move area there too, so we get a lot of support there around 52. Now, if I can get that 52 level to hold, if I can get bears to try once, if I can get bears to try twice, now I can be a buyer going back up into that range. Now, this is a failure pattern, but it's a little bit more conservative, right? You'll notice I've got this drawn up, so it's a little trap low there. Traps are not required, but they really won't hurt at all, right? Double bottoms or traps there to buy it right back up. I call that a crown reversal, or the more technical term would be a nested failure pattern coming off of that low. And again, it's a very similar pattern to how I want to sell above the high. As we go higher here, it's one try buyers now, right, to buy the pullback, and I'll sell into their stop losses as we go right back into that range. I can get aggressive on that because we're overall bearish. I can't get very aggressive being a buyer underneath this range, can I? I've got to really stay patient for 1, 2, then I know what stops are. Now I can buy right back up into that trading range. Now, that's the easy buy, right? What's the more difficult one now is as we try to go higher, right? Because as we try to go higher, we know where they're trying to go. But again, don't misinterpret this. I'm not trying to predict the move going higher. I'm going to wait for one of two patterns, either a 1, 2, 3 breakout. That is a strong move up. They hold the pullback to the moving average, right? So they couldn't do that back here. Okay, we see this all the time where the market jumps up, the buyers can't hold, and they collapse back down again. Okay, I don't want to do that, right? I don't want to get caught trying to buy that first pullback. I'll wait for the pullback to hold. Then once I get it, then I'll mark up that high, mark up that low, and I'll call that my hidden channel, right? Find the low and buy the low of that hidden channel. Now, that's my favorite reversal pattern, my favorite kind of breakout or reversal pattern. It takes some patience because you got to wait for the market to break out, you got to wait for it to pull back. And if you're wondering, why don't I just try to trade breakouts then? Well, look for yourself. What happened the last couple times, right? They failed. Breakouts cannot be trusted in real markets. Yeah, penny stocks and cryptos, all those gamblers markets. Yeah, that's fine. But if you're trying to make a real income, right, to pay your real bills with real markets, you don't want to trade breakouts, right? So again, we know that gap is the target, but I want to make sure I get that 1, 2, 3, hold that pullback, right? And then I can find my hidden channel. We can buy the low of that hidden channel. Now, again, the objective here is going to be getting up to that gap fill. Now, one more pattern I'm thinking about here is going to be a 2-try breakout pattern. This is kind of the same thing as we saw before, right? We talked about that one going lower, right? Same thing now. Strong move up. Buyers take profit. Higher high. Bears come in to sell it. Trap low. And looking for a buy off that trap low. You do want that trap on this because you're going to be getting very close to that gap. In order to get that strength, you're going to have to lose a little bit of this open space up here, right? Once you get that strength, buyers take some profit, bears come in, and we are trying to buy that trap, right, as we go back up to fill that gap. So again, speaking of gaps, my favorite strategy for a gap is to anticipate those counter trend gap fillers, right? Getting stopped out so I can sell right into those stop losses. It's a range. We're buying low. We're selling high. We're also keeping an eye out for breakouts as we go tomorrow with the 2-try breakouts and the 1, 2, 3 breakout patterns. Boy, oh boy, I've covered a lot so far in the first 20 minutes of this video. We've talked a lot about some different patterns, breakout patterns, failure patterns. Here's what I want to do. I want to make sure I get you a deep dive into all of these patterns, because if you're here for the first time right right now. This is a lot of terminology I'm firing off right now for you guys. I want to make sure I give you a deeper dive into the entire trading strategy. So up in the upper right-hand corner, I'm going to put a link up there for our free trading course. Make sure you pause the video at some point today, grab that free course, get registered, because as part of that free course, you'll learn all the terminology, obviously, but most importantly, you'll learn my 4 favorite entry patterns. You'll learn my 3-step trading strategy. I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets. I'll tell you right now, if you're serious about your trading career, you definitely want to grab that free course linked up in the upper right-hand corner. And again, don't forget all the different stuff I talk about tonight. I'll put all the links, by the way, in the description of this video, right? So don't delay, get registered. In the meantime, though, let's keep going. So now that you kind of know the idea of what to expect now let's grab a look at the S&P. So what do we know now about the S&P? Right, S&P is very, very similar. We open up here with a big gap down, right? A lot bigger than we had on the oil, right? Big gap down. What is a gap down? Right? It's just a strong momentum move down. There's nothing special about a gap. There's nothing magic about it, right? And they are correct. Most gaps do get filled. But the question is yes, we know that like 90% of the gaps get filled, but we don't know is when. Will it be today, tomorrow, next Tuesday, next month? I don't know, right? Nobody knows. Okay, all we know is there's a good probability they will get filled. So what's the best way to trade a gap? Every time those gap fillers, every time they try to force this thing going back up, you sell right into their stop losses. A lot of times you'll find plenty of ways, right, to find easy examples where, right, they go up, they're going perfect. See, we're reversing. They try to buy the pullback and you're selling it back down. They go up, right? They got their eyes on that gap overhead and we're simply selling as they go back down. That's my favorite way to trade a gap. So we know that gap is there, but I'll tell you right now, you can't even see it on this chart. So I wouldn't get your hopes up for a gap fill for tomorrow. I think the bottom line is to get that gap filled, you'd have to see some really big sensational headlines, right, coming out tomorrow morning to reverse that huge gap. Now, obviously anything is possible. We'll keep our eyes open on this. So we know we're bearish, big gap down. We know we have that bear market down into a range. Okay, this trading range, if I get rid of some of these extra lines here, there's a lot on this chart right now. I'm trying to clean this up as best as I can for you. Okay, perfect. Anytime I see a trading range, I look for these, right, these pendulum swings, right? Make the move down, make the move back up, make the move back down. So this area right there, right, it's a really, really great level of support here for us. What does a range tell me to do? Buy low, sell high, and avoid the middle. Okay, I love the fact this is a bear market into a range. So what do? We sell high. I can be a lot more aggressive being a seller on the S&P tomorrow. Buy low. But how do I buy low though? Very carefully, right? It's a bear market. I can buy, but I have to use that special pattern, right? What was it called? A crown reversal or a nested failure pattern. Stay away from the middle. Right? Stay away from that middle, and we'll definitely keep our eyes out for breakouts tomorrow. There's no reason why this market couldn't break down, right? For example, where do bears want to go next? Bears have their eyes on that big round number at 3,200. If you look left, there's a big old range over there at 3,200. That'd be a big magnet here for those bears. For the bulls, I think it comes without saying, right? That gap fill up at that 3,290, that's where those buyers want to get to. It does seem to be a little bit unrealistic though right now. So we'll definitely see what happens here in the overnight session. So we know we're bearish. We know we're to a range. I want to buy low, sell high, and avoid the middle. I've got my my expanding triangle here. I'm not quite sure. I mean, that actually doesn't look that bad. That might actually be our expanding triangle down right there, right? Something like that, right? So grab that. Make that green. Sometimes these triangles are not the easiest to find, but that looks pretty good to me. Okay, so now what's the plan, right? The plan is stay out of that middle. I want to get up. I want to let those buyers, right, just before, let those buyers try to buy that pullback and sell right into those stop losses, right? So big move up, let those buyers now try to come in, let them try to fill that gap, right? We know where their stops are now, and once we know where those stops are, now we can place our orders right where those buyers get stopped out, right? Jump in on the failure. Don't forget to hold on to a couple contracts for that pullback, right? Again, it's a failure into pullback combination. Now, we may also see something, right, called a two-legged pullback, which would be something more like this. 1, 2, 3. It's actually 2 legs up. We draw that trend line up over, and then we try to use that trend line on the other side, right? These are very, very common whenever the pullback is really large. So it's a failure pattern or a two-legged pullback pattern. Again, I'm looking to get up into that range. I'm looking up above the range. I'm looking for buyers to confuse this as a reversal, try to buy the pullback so I can sell it back down in. And again, I'm just simply illustrating the patterns that I'm watching for and locations to watch for tomorrow. If you want a much deeper dive into the entire strategy we're talking about tonight, make sure you grab that free course linked up in the upper right-hand corner. Now, how do we buy off the low? We buy off the low very carefully, right? With that 1 try for the bears, 2 try for the bears. I'd love to get, again, a trap below that prior swing. Trap would be ideal. We don't need a trap, but that would definitely be kind of the goal of it. That'd be the best possible scenario here. Double bottom is good. Trap is even better to get that buy. And again, we're waiting for the bears to try once. Wait for the bears to try twice. Why do we let those bears try twice? Because it's bearish, right? We don't want to be a buyer and get too aggressive. That's the problem with getting too aggressive underneath that low. Now, speaking of which, right? That's how we buy low and sell high. How do we trade the breakouts? How do we trade breakouts right now? Now, again, there are 2 basic patterns I like to use for breakouts. One of them is called a 1, 2, 3 breakout. So strong move down, hold the pullback. I'm going to mark up that low. What I'll do in this case is I'll try to find that hidden channel up off that high and look to sell off that high, right? So again, if we do get that 1, 2, 3 breakout, and don't be foolish, right? Don't think just because a strong move down, you can trade a breakout, right? Strong moves down, strong moves up are not enough to qualify the breakout. I want to see a strong move down. That's great, but I want to see him hold a pullback and then jump. Okay, that confirms for me that whatever magnet was there in the range is now broken down. At that point, now I can mark up that low. Again, what I'll do is, with this particular case, you got those highs up here. You're looking for that little spot overhead that nobody quite sees. You're waiting for that pop up. And a lot of times what happens is this will be one of those failures, right, above the moving average, like a failure, right, and that run back down, almost like a buyer failure. You know, again, look like this. Right? They go up, they try to buy, and they collapse back down under their own weight. Again, it's a range market, so you're selling above that high. But if we see that big, strong move down, though, right, holding that 1, 2, 3 breakout, we know what's going on, right? And again, we're looking for that 32, right, 3,200 for the runners for tomorrow. As we go higher here, how could I get a breakout going higher? Well, as we go higher, again, I've got to see a 1, 2, 3. It's got to hold. Right? If it can't hold, I can't do anything with it, right? So if it goes up, if it jumps up here, I'm still looking to fade it. I'm still looking for the buyers to try to buy that pullback. I'm still trying to sell into their stops, and we'll still look to grab that pullback pattern way back in, right? Again, look left. You can see strong moves are not enough to qualify the breakout, right? We got to get right now is we got to get that strong move up. They have to actually hold that pullback now. Show me they mean business. Once I get that strength move going higher, what's happened here is once they hold the pull back to the moving average, the market jumps because the bears are giving up. It's not the buyers ripping the ball out of their hands, right? It's the sellers going, here, you take it. We're good, right? The bears give it up to them. Then mark up that high, go back to that low now, find that low, and that will typically be now, right, where one of the most reliable entries is going to be. You know, and this reminds me, you know, there are lots of different ways you could trade this. probably thousands of different ways you could trade this. These are the setups that I want. These are the A-plus setups, right? Tomorrow morning, we're not just trading everything that moves. We're trading what we know is reliable, what we know we can bank on, what we know we can build a career on, right? That's why I don't buy that first pullback, right? Yeah, sometimes it will work. And yeah, it's not fun to watch it go without me. You're right. It's not fun to watch it go without me. That's just part of it. That's the way life goes, right? Sometimes you have to play it safe so you're ready when the good stuff comes, right? If I make it a habit of trying to force those breakouts and I keep losing money, the next time I do get a good pattern, I'm not going to be able to take it, right? I'll be all, mentally beat up, financially, right, bankrupt, right? It won't work that way. We have to really stay disciplined. And this is really why I try to illustrate these ahead of time so I can visualize and really get you guys ready for tomorrow. That way don't get roped into that first breakout pullback, right? We know now what the plan is for tomorrow. We can stay patient. And of course, we'll do it together tomorrow. Let me do every morning, right, in our trade room. So we know the breakout going higher. Another thing I'm watching here, again, with this trend line here, right? As we go higher here, if this thing just rips higher right now, right? If it just rips higher here right now, the most aggressive pattern, right, might not be a bad look to it. That 2-try breakout. You'll notice though where I'm drawing it. I'm drawing it right below that trend line. If we can get a real good rip going higher here, right, wouldn't be a bad little scalp to grab that trap. Now remember, there's a very big piece of this, and that is those higher highs. Okay, never got the higher highs back here. Right? Those were not higher highs. I can guarantee if they were higher highs, they would have bought that trap. Right? So again, we go up. Shallow pullback, higher high. Now we know we have that trap, right? And now that trap low can be bought. Ideally, it'd be better if we get above that trend line, but I just don't think I don't think you'll have to wait that long. I don't think that trend line, I think it's still too far away. So if we do see it rip higher here, goes right up into that trend line now, watch them hold, right? If they hold it and they keep making higher highs, again, they didn't get that back here. Right? Didn't get the higher highs before. If they can get those higher highs up here now we know momentum is really strong for those bulls, and we look for a trap low as we go back higher from there. Right? So 2 types of breakout patterns going higher. And again, the same thing goes as we go lower, right? 1, 2, 3 as we go lower, or strong move down, buyers take profit, lower low, right? Bears take profit, lower low, buyers come in. It's called the 2-try trap pattern as we go down from there, right? Same basic patterns, using them in different ways based on the current market conditions. And again, don't get caught trying to force those gaps getting filled. Buy low, sell high, avoid the middle, fade those breakouts, but keep your eyes open for those breakouts, those 2-try breakouts, and those 1, 2, 3 breakout patterns going forward. How about some Nasdaq here? Nasdaq, again, very similar here to the S&P. I won't spend a lot of time kind of regurgitating the whole thing, but we definitely do know there's a big gap down. What is a gap down? It's a big red candle. Right? Imagine that big red candle. That means this is a bear market, right? That means every time these buyers try to go back above it, we want to sell into their stops. Every time those rookies, right, they try to fill that gap, we're selling right into those stops. Again, my favorite strategy for a gap has really nothing to do with the gap. It's people who don't know, right, probabilities. They don't know about this stuff yet, right? You can catch them trying to go in the opposite direction. I remember when I was a young trader, right? I thought gaps were great because they were almost a guarantee, but then I realized, wait a second, you can't tell when they're going to get filled. So now what I do is anytime I see a gap on the chart, I wait for those times, those counter trend traders to get caught trying to fill the gap. I look for my failure pattern, right? I wait for the buyers to come in, try to fill that gap, and we simply sell right into those stop losses. We also know we have a range here right now, right? That range as we go down into that trading range. Okay, my favorite ways to trade ranges is to buy low and sell high, right? Selling high, I can be a lot more aggressive. Buying low, I've got to be patient, right? Because we're going against the trend. I also know that I've got that expanding triangle. right? This one is a little more, you can see here, right? There's my triangle low, there's my triangle high, right? If I had it my way, I'd be looking to buy off the low of that triangle, right? Looking to sell off the high of that triangle. We don't always get it, but boy, I'll tell you, it's a great, great level of support or resistance, right? To keep your eyes on. And again, as I mentioned earlier, one of the most important pieces of this is the fact that let's say we do go up and we roll back down again. At that point, if we're selling off the high up here, right, which by the way is where that pendulum swing would be, right? If we can get short off the high here, okay, now remember, as we go tumbling back down, momentum will be so strong, right? Because once that triangle gets really wide like that, that momentum becomes so strong, so we can probably get short down around those lows as well. Okay, let's talk about that again. We covered it more earlier on. Again, relatively simple idea, right? Stay out of the middle, buy low, sell high, right? So stay out of the middle here. If we sit in the middle, sit on hands. I want to get up above the top of that range. I want to see those buyers come in and try to buy the pullback. Once I see them commit, now I know where their stops are. I can sell into those stop losses. I can sell on the pullback. I tell my clients the same thing. Sometimes you don't feel confident looking at failure. If you don't take the failure, make sure you're ready for the pullback. Okay, and again, right, same thing over here. We go up, the buyers try to buy it, we know where stops are, and we're simply selling back into those stops. Check out that free course, as I mentioned earlier, right? In that free course I mentioned, you get lots of examples of how these patterns look on real charts, right? Tonight, I'm just simply drawing them up. But again, get that deeper dive in that free trading course. Also, too, keep in mind, right, sometimes you might see a two-legged pullback as we go higher. If that's the case, get underneath that trend line and use it now as a key level of resistance. These will oftentimes set up here for almost like a double dip type of pattern here. For example, you can see one back here. We go up, we pull back, we go up, right? You can draw that trend line overhead. And you can see it's like a double dip, right? It's a failure pattern and it comes back and you can smack it, right, for that two-legged pullback pattern, right? It's a failure and a two-legged pullback setup, right? Sometimes we get both of them. Most of the time, though, the failures are the ones you really want to look for, right? As we go up, it's a range, wait for buyers, try to buy the breakout pullback, and we're selling back down again. I realize I'm sounding like a broken record right now. But again, repetition is what it takes to be successful. Again, if we go lower here, right? As we go lower, watch that trend line. Watch that trend line. As we get down to that trend line here, watch for those bears to try once, high or low, try twice, trap low. Again, I call that a crown reversal, right? If you don't see that little trap low, it's called a nested failure pattern. It's a great, reliable pattern. It takes some time to get it, though. As you can imagine, it's not going to trigger in 5 minutes. Right? It's going to take 20, 25 minutes to get this thing to slowly start to turn around. Remember, you're going against a trend right now. So it's worth waiting patiently for it. Okay? One more thing you want to think about too is what's a breakout look like? Right? Breakout, 1, 2, 3, break down, mark the low, again, mark the high, find that hidden channel high, and sell off the high of that channel. Okay? Or do we just tumble here overnight? If we do, profit taking. Lower low. That's the key here. Lower low. Very important. Trap high. If you see a strong move down and you see a lower low quickly there, it's almost a guarantee now. Bears are waiting right above that high. Once it comes up, wait for your signal and smack it right back down again. And heck, if I can use the underbelly of that triangle, then by all means, even better. Not required, but a great cherry on top for that setup. Okay, so now we know how to trade it as it goes lower here. Where's my target, though, as we go lower? There's a big old gap. There's a big old range down here, 8,800, right? So 8,800 is a great big milestone for us later on this week if this thing keeps going. Right? It's a big range. Again, if you look at a bigger picture chart, there's a big range back there, I believe from earlier on in the year. So 8,800 is a great spot for us to leave our runners for tomorrow. As we go higher here, obviously, the buyers want to get up to that big round number at 9,100, but let's not joke. Let's not fool, right? Everybody's got their eyes on that big gap. Right? Those gaps are just begging to be filled. But again, I can't be buying this thing yet. We're so bearish right now. I have to wait for a 1, 2, 3 reversal. Again, a strong move up is not enough to buy that pullback, right? You can see how that works, right? If we get that 1, 2, 3, again, what I want is I want that move up. I want them to show me the pullback off the moving average, jump off that moving average for me. I know it's not fun to watch it go without you, but again, we don't have enough information yet to know it's gonna keep going, right? And my job is not to trade everything. My job is just to trade what works, just what makes us money. The most reliable stuff, okay? I'm not going to waste your time by saying you can do this, you can do that, you can do this, you can do that, because all that's going to waste your time and cost you money. If I do see that 1, 2, 3, I'm going to mark up that high, then go down to that low, find that hidden channel. Okay, sometimes it's a little bit tricky to find it, but go back to that low, find that hidden channel, and then now you know exactly where your sweet spot is. Okay, no matter where this thing is, if we get that 1, 2, 3, and we jump, when it pulls back to the low of that channel, you got to hit it. You got to hit it. You know, it's like one of my first trading coaches told me, the one mistake you can't make in trading is not pull the trigger on your good setups. Your job as a trader is to know what a good trade looks like, right? Know what a good setup looks like. And I'm going over a bunch of them for you right now. But when you see them, you got to hit them. You got to hit them, right? That's your job. It's like rest his soul, right? It's like Kobe Bryant, right? He gets the ball, top of the key. His job is to shoot the ball, right? LeBron James, his job is to shoot the ball, right? Jimmy Garoppolo, right, for the 49ers for the Super Bowl next weekend. His job is to throw that ball. When you get an open receiver, your job is to throw it, right? Same thing with day trading. When you get a good setup that makes sense, goes with context, with momentum, right? Like we're identifying right now, our job is to hit it, right? We have to hit it, okay? We don't risk too much as far as a percentage of our account. And again, we'll talk a lot more about all of those details, right, in that free course, right? I won't go over all the details right now with you, but grab that free course though, and I'll go over a much deeper dive there with you. Okay, and again, don't be afraid here for that strong move up, right? Big strong move up here. Pull back off the high, higher high, right? A higher high is the key. Once you get that strong move up, combined with those two higher highs, you know what's waiting here. A very reliable trap low on this, right? A very reliable trap low to keep that party going, right? I have a lot of other patterns we'll talk about tomorrow morning in our trade room, but these are the ones I really want you to be thinking about here for tomorrow on the Nasdaq. And again, tomorrow, 8 o'clock Eastern time, we're going to execute this buy low, sell high, focus on failures, right? Ignore the gaps. We'll do that together tomorrow. Last but not least here, over on the gold, the yellow metal. What do we know about the yellow metal right now? It's different, isn't it? Yeah, we get the gap up on this one. Makes sense, right? While the equities and the commodities are gapping down, right? Gold, the shelter market, the fear market, right? Gaps up. You'll notice one thing very important here. The size of the gaps down are nowhere near the size of the gap up, right? I thought that was really interesting when I saw that this morning when I came in. I was like, wait a second. The gap up here is very small compared to the gap down that we saw on a market like oil or the E-minis. That to me is a really big sign because, obviously, right, if the world is really coming to an end, right, thanks to this, virus of sorts, I would think that gold will be really piping hot right now, running higher. It goes to show, remember, the markets are always right. And this gold market really tells an important story for us right now. I think we'll be probably seeing this thing start to unravel here in the next few weeks. So I'm not going to go too much more detail on this, but one thing I do want to remind you is contract rollover for tomorrow, maybe Wednesday on the gold. Again, we are watching as we open up in Asia right now. It does look like, fresh out the gate here, the 220 contract is still in play right now. We're going to see what happens here, right? So as soon as that 420 contract is more volume, you'll trade that 420 contract on the gold. Okay, what else do we know right now? Bull market into a range. What does a bull market tell me? A bull market into a range tells me buy low, sell high. I can be a lot more aggressive being a buyer. I've got to be very careful, very patient being a seller. I also like to, of course, once I have a trading range, I like to draw on my expanding triangles. These levels are my favorite ways, right, to sell high, to buy low. And remember, once that triangle gets really wide, that's when you've got to start thinking about breakouts because that momentum will start picking up. Right? Remember that earlier, right? Once that expanding triangle right? I can buy low, sell high. I can do that when the triangle is relatively narrow. But eventually, once I get up to those highs here, right, and then we start to come back down, now that momentum really starts to cook. Okay, now I can't do the same strategy any longer. Okay, and that's what's possibly setting up here on a lot of these markets for tomorrow. Okay, we know it's a range. We're going to buy low, sell high. Where are the bulls trying to go? The bulls are trying to go to 1600, right? 1600 is a big old target overhead. Obviously, a retest the high. But if we can get to the highs here, though, 1600 is the next big milestone up. Okay, that's the next big milestone. Where's our target going lower? As we try to go lower, the gap, obviously, I think is pretty obvious here, 1571. That's a very easy gap to get filled. We may easily see this mark come down, fill the gap, and go right back up tomorrow. I will definitely be watching for that as well. As we go lower, though, right, there's a relatively big open space down here, down to that 1555. 1555, let's call it 1555.5, right? All the way down for there's a big range down there around that 1555 area. So if we do end up collapsing tomorrow, 1555, again, we'll call it 1555.5, right? It's in and around that 1555 area for that big objective for the bears for tomorrow. So now we know where they're trying to go. I get some levels marked up here, one leg, two leg, got measured moves down. You'll notice all I'm doing right now is I'm trying to find this range. I'm trying to find some levels of support that I can use to buy low, some levels of resistance I can use to sell high. Now we know it's bullish, so I want to be a buyer under the low, right? How do you buy under the low in a bear market? You wait for the market to go lower. You wait for those bears to come in, try to sell that pullback. You wait for those stops to get run. We buy into stops. We buy the pullback to the EMA, and we go where? Back into the range, other side of the range. Then what do? Right? So the failure into a pullback. Okay, you measure the distance. Take that distance, pop it up high. There's your big runner target. Right around the high of day, right? Hopefully that's something as easy as that tomorrow. So again, as we go lower, seller failure pattern, right, into bullish pullback pattern. First target's off at the top of that range. Leave the runner for that pendulum swing. As I showed you earlier, the amount of the move back and forth, right? It loves to rotate back and forth like that. That's how we're going to buy off of that low. How do we sell off the high? We sell off the high with a crown reversal pattern, right? So as we go higher here, we let it go up, we let them try once, we let them try twice, and we sell back down. Again, why? Because we know it's bullish. If I want to be a seller, just because I'm above the range doesn't mean I can ignore momentum, right? I want to let them try a couple times to get the job done. You can see an example of that right here, right? We go up, they try once, they try twice, and you can see right where they get that trap, right? They get clobbered, right? Everyone's waiting to sell it back down. That pattern's very, very common when you're trying to go against that trend. We go up, buyers try once, buyers try twice. If I can get that trap, even better to short that sucker back off the high. Don't forget, stay out of the middle. Right? Stay out of that middle. Now, what a breakout look like? What a breakout look like? I also want to talk about the gap fill too. If we get down to fill that gap, right? If they run all the way down to that gap here overnight, at that point, it's not going to be as easy as a failure back into the range. It's going to be relatively bearish. Okay, but if we can get that gap filled, the odds are pretty good. We're going to get the gap filled and find our way back into that range. So how can we do that? Strong move down. Crown reversal, absolutely. If we get that big of a breakout, now momentum's very strong now for those bears. Let them try once, let them try twice, and back up in from there. Okay, that's kind of the key here if we do get that gap fill. Okay, it doesn't mean we've got a breakout successfully yet. What does a breakout mean though? A breakout would be actually a 1, 2, 3 run lower. Now I can mark up that low, mark up that high, and look to sell off top of that hidden channel. So not a lot changes there as far as a breakout pattern. If we do get that 1, 2, 3 breakout, we can definitely use it. Or let's say we collapse down here, right? We just collapse here overnight, profit taking, lower low, trap high, 2-try trap pattern. We see a lot of these patterns right now in these markets. Grab that free course that I mentioned in the upper right-hand corner, or all the links in the description of that YouTube video. And again, buying breakouts going higher, I wouldn't recommend it. Right? We can't just take a big strong move up and try to buy that pullback. It's not going to work, right? Go up, hold the pullback, and show me you mean it. mark up that high, mark up that low, right? And we're buying off the low of that hidden channel. Again, we know where we're trying to go as we go higher. All right, guys, I know I'm repeating myself a lot right now. I know a lot of these markets are pretty much identical. Remember, take advantage of momentum, bullish for gold, buying underneath the range with seller failures, right? Don't get too wrapped up in filling those gaps until you get the breakout, and keep your eyes open for those counter trend traders trying to force those gap fills for easy, profitable setups here tomorrow. And speaking of tomorrow, right, I've gone over a lot here tonight on this video. I'm going to break this all tomorrow down, though, and do it with you guys tomorrow morning in our trade room. Getting registered is really, really easy. If you're here on YouTube right now, I'll put all the links in the description of the YouTube video. Get registered as a brand new advanced member on our website. Again, all the links in the description of the YouTube video. If you're on the blog right now at Sideways Markets, there'll be links below us as well, or go to the website at schooloftrade.com. Get registered for the advanced course. That way tomorrow morning, I'll see you there with me at 8 o'clock Eastern time, and we'll execute the strategy together, right? Remember, you got to know what a good setup looks like and be confident to hit it when you see it. If you don't know what a good setup looks like, that should really be your first clue. Get with me tomorrow morning. Let's do it together so I can show you what a good setup looks like as it's developing and how to hit it right when the time comes, right, to make the most out of every day's opportunities. Don't forget to call that toll-free phone number in the upper left-hand corner. Use that live support tool if you want to hook me up on live support. And as always, if membership is not quite right for you right now, definitely take that free trial. The free trial includes our free trading course, a free pass to our trade room, hundreds of examples of how we apply our favorite trading strategy to our favorite futures markets. Again, all the links, the description below the video. Great to be back here with you guys and gals on this video newsletter. Boy, what a sad story over the weekend, right? We got people hurting, right, in Asia over this virus. My heart goes out to anyone being affected by this virus right now, especially if you're in Asia right now. Please stay safe, right? Stay healthy, right? Be aware of your surroundings. And I'll tell you right now, as an Angelino, as somebody who lives in Los Angeles, oh my goodness, the shocking news over the weekend about Kobe Bryant. If you're here in Los Angeles, I'm with you. It seems like everybody right now is really kind of grieving over the loss of a very big local hero, really a global superstar. So wasn't the easiest of weekends for sure, but I feel great to be here with you guys, right? Because I know I'm surrounded by great people. So have a great rest of your evening. Right, keep all those affected by a couple of these tragedies here in your thoughts and prayers. But make sure you come back and see us again tomorrow, 8 o'clock Eastern time in the trade room. We'll trade the plan together. If not, come back and see us same time, same place tomorrow night on the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.